Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey.
Mr. Marco, how are you, man?
Good. Excited.
I can't keep my eyes off this AMC, to be honest.
Same.
I'm looking at this thing going, I was kind of not really kidding, but kind of kidding when I said $50. I mean, it looked like it was going to, now you look at it, and for everyone who's thinking it's got to come down, the thing's traded 500 million shares at $50, like on an average of $50. Like, at the end of the day, you can't, this is can't fight crazy with crazy, right? You cannot try to short this stock. You have to let it be. In fact, what I would say is the options, I was watching the options just to watch the option. The stock was going up $3 and the puts were going up 50 cents. The downside puts were going up.
Wow.
You don't see that often. That means what? That means that basically the Citadel guys are just ramping up the volatility, right? Either somebody's getting beat, and all I kept thinking was it can't be that Melvin Capital got beat again. It just can't be. They can't come out with a statement saying they lost another $5 billion losing on AMC. It would be disastrous for them. People would run with their money and they would say, where are the risk controls? Why would you get back into something like this? So I would be surprised. But when you see all of the different names, those are the names that these hedge funds, they want to short, because again, it's, you think about these, it's very difficult to change someone's mind about investing when all they know is, hey, we look at fundamentals. We understand what a company does. We dig in, we understand what it's worth, and we understand how the price and the valuation of that coincide with each other, right? They understand that. So I always try to tell everyone, said, this is something that people have not seen. Many people have not seen. And you have to remind them it's, if a Martian landed right in front of me right now and he said, hi, and I'd say, what? I wouldn't even understand first, like, what are you? Like, I'm a Martian. Where'd you come from? Outer space. How'd you get here? My spaceship is outside. You'd be like, you can't even comprehend it. It just doesn't even make, like, what's going on? This is the same thing. Stock is trading 60. How? It just is. It goes up. Why? Nobody's selling. Who owns it? About 3 million people, probably 6 million now. How much do they own? The whole company. And why do they own it? Just because they want to beat the big hedge funds who are short this. Okay? I don't understand. Like, it just, they can't comprehend it. So the point is that there's 500 million shares, and you always have to respect that. So in this situation, try not to think that you can catch the top on this, because it's unlimited. There's no reason. If it's trading 60, it could trade 100. We talked about the story about Volkswagen the other day, and how my boss, I learned this lesson firsthand, and it shouldn't have been at $10 when we were looking at it. Okay. Maybe it shouldn't be 15 according to a fundamental analysis. Okay. According to what people might think it's worth or potential. But it was, and then it was trading 13 on millions, hundreds of millions of shares. So you have to respect that. Like, price speaks and volume speaks. So I think the most important thing here is to understand that there is nobody knows where the top is on this thing. Okay. Nobody knows how far it can go. And look at GME. It trades all the way back it goes to 500 to 50, back up to do it. So nobody knows. So you have to leave it alone, and you have to let the machines and the people who hold the stock, they're probably laughing because they figured it out. If we don't sell, the machines are going to trade back and forth 500 million times, and eventually the shorts just get killed, and by the way, they have to buy it off someone. And if we don't sell, there's nobody to buy. So I think is a big lesson here. There was a lesson learned in GME. If you missed that lesson, it's here again. It's interesting. What I would say is I'm looking at these options. I'm looking at the options board. It's frankly, you should my best advice is to try not to play AMC too much on the option with the options. You want to dibble and dally around the stock and mess around. It's just it's important that you understand that right now, I can imagine Citadel thinking we want our money back. If they've lost money here, we want our money back. Granted, they're making a lot of money on the trading. They're making a lot of money just on the bid offer and the trading for sure. But they might be losing on this potential move. And now, they get that you could see the IV. The IV is raised. It's just a dial. So they've turned this up. They've made it like this to attract. What are they trying to do? Essentially attract sellers, probably because they're short. Okay, they're short half a million. Half a million, yeah, probably a million. They're probably short. If everybody's buying the calls, it's them that's loading up on this short. So now they're raising up the implied volatility to get people to sell them options. And ultimately, this is a tough game to win. This is a tough game to win with options. Okay, right now. 4 weeks ago, when it was 90, 100 vol, and you wanted to take a shot and, take a $20 call and, pay 50 cents or 60 cents. It's different. Now you want to buy, let's look at the board just to give you an idea of when I say it's kind of crazy and this is what you have to be thinking, you want to be careful about, let's just look at this point, implied volatility. It's through the roof. It's almost like it's so high. It doesn't matter. You have to think about what you're actually buying. But, you look at, you say, okay, it's going down. The July options, the July 35 puts are $12. Okay, they're 11.75 called 11.60, 11.70. They're $12.
Wow.
So the stock is trading 61. So just to break even, just to actually have it worth more than what you paid for, it's got to be you got to be right at, it's got to be 23 below 23.30. Below 23.30, then this trade is actually up a little bit of money. If you sold it, anything above 23.30 is good. Now, $35, you're thinking, well, 23.30, if it drops by half, and this thing just moved to 64.90, is that right? I mean,
Wow.
If it drops by half, it drops by half, which is, it's already up 100, but it gives it all back and it trades 32, you probably still don't make any money. If it trades 32 by Friday, this thing is probably worth $8. You'd actually lose. The stock would go down $32 and this thing would be worth probably by Friday, $8-9. Okay, so what I'm trying to say to you is it's very difficult to play anything out here. You want to take a stab at selling it. That's hard too, because when it gets down to 35, you're going to think, oh my God, because it just went down 30 points and, you didn't make as much as you want and now you're short. And I think it's time to kind of, this isn't the moment to jump in. If you're in it, great, have fun. The stock is up tremendous amount. I don't know what they literally, I actually think it's everybody there. They're just literally holding hands. I envision holding hands is going, nobody sell. And you know what? They can't buy it. We own the company. They can't buy it. So again, Citadel right here, this right here, these numbers at 400-500, this is absurd numbers. We only saw this with GME and it got to about 500-600. This is a 500-600, 400. I mean, it's something to look at. Maybe we should take a picture of this. I'll take a picture later because it's not something you're going to see often. Okay. Not in a stock that trades 500 million shares a day. It's incredible. So keep that in mind, that this is a great story to just remember. I'll remember this forever, and tell people 20 years from now that are just starting and saying, just remember this, just like they told me in Volkswagen the first time I saw something like this. And I was like, this is ridiculous. 150, 200, 250. All right. At 300, we got to sell some. 400. All right. 500. It went to 900 and something dollars, $910. By 700, you stop counting. I'm just watching it going, how is this even possible? But you learn. And so you learn that a stock my boss used to say it's just a ping pong, and it goes up and down, and it's like the wind is blowing it up and down. So you have to be very, very careful. And $70 as we talk, $68. It's insane. So this isn't gonna. I mean, we could just sit here and watch the stock, and actually that'd be probably a good show. But let's talk about what's going on in the world. The other things are, one, there's this big hacker. So my thought is, when I see this article about the meat supply and food, and we keep talking about, remember in history, the real problem is food, right? People can't eat. Can't forget about black, white, yellow, whatever. You can't eat. Everybody's the same color. We go after the person who's got the food. So, just keep in mind that food is a very sensitive thing. But now you go after food. There's a hacker, a JSB, Brazilian company, maybe messes up with the supply of food. Okay. The one thing I want to point out is that now we've seen 2 hacking situations in the last few weeks, one on the supply of oil, one on the supply of food. My question is, how many of these hacking incidents happen that we don't see? And then the next question is, if it's, there's a lot, we just happen to see these 2. The next question is, why are these so out there in the media? Why do these come out and start people talking about it? And remember, the media wants you to see what the media wants you to see. And when they want to see, to some extent, it's put there in front of you for a purpose. The only thing I can think of, and this is just thinking outside the box, given it some small probability, is, can this be a setup? Can this be a setup for the government talking about, again, bad actors in the Bitcoin space and saying, see, look what they can do there. Look, this is all the bad actors. They're using this Bitcoin to potentially, hurt us. Mm-hmm. Okay. And that's why we're going to be against it. It was only a month ago that Yellen said it's used, for basically thievery and taking money. So I don't know. In a way, I just could see the story developing. She makes a mistake saying something. It's, that means she's hearing it. She later retracted it and said, oh, forget that I said that. But, she's hearing it, and she's, it's in dialogue. And then they start popping up with these hacking. Not that it didn't get hacked, but it's just out there in the media. So it's something to think about, because I'm looking at the Bitcoin chart. It's not, goes through 50, which was a big level, 40, another big level, having trouble at that level, trades 30, bounces back. It's in between 30, 40, up and down. Breaks 30, you're going to see 18 quick, I think. It just shows that it's something wrong there. But I would watch that. I think, you got to give it some percentage that we're starting to see a lot of this. There was another guy, I think, that was, there's an article of someone that was basically mess around and he was being what do you call it? He had like a car wash. I don't know. He's money laundering on right. Millions of dollars of Bitcoin. So the IRS is also probably going to come out saying they've caught so many people. Like, they want to scare people into paying their taxes. So they're going to make an example of someone, I'm sure. So you have a lot going on, and a lot more in Bitcoin. The negative news is starting to pop up a little more, but not so much like Bitcoin is bad. It's, people, they know how to do it, right? They say, hey, food, you can't eat. All of a sudden people are like, wait, I can't get favorite, beef, or I can't get my food, the food that I want. Why? Oh, because they connect the dots for you, right? Yeah. The masses need the dots connected. Bitcoin bad. People are like, I don't own Bitcoin. Bitcoin not going to let you eat. And they think, well, why we got to stop this Bitcoin. So anyway, that's a out of the box thinking. Potentially it could be something like that. In other news, JP Morgan upgraded FedEx. We've been talking about these names. FedEx, UPS. Keep in mind, UPS next week, June 9th, this woman is talking to CEO. She's former CFO of Home Depot. She's the one turning this around. She's the one cutting costs. She's the one saying, this product, no good, take it out. This product, I like, keep it. Amazon, you got to pay us more. Otherwise, we're not going to service you. Go do it yourself. Just like FedEx said, if they say something like that, it's near term probably negative, because revenues they make a lot of money, but it's very small margins. They could focus on something else and something bigger. So that's something to watch next week. And that's it. I was going to say UOA is actually, we can take a look. It is dominated by Wall Street bets. Frankly, they won the game, right? I mean, they won the game as of today for 2021. They won the game, right? They did it twice now. And again, how is it possible that if Melvin or the same couple of names pop up, it just can't be possible that they've blown up again. It would look really, really bad. But you have AMC, BB, Palantir, Nokia. Top 5 are Wall Street Bets names. I'm not sure, maybe Neo is as well, but I know Rocket is, AMD is, and I believe AAL is up there as well too. So you're talking about 12 out of the top 13 names with volumes of over, AMC is 3 million, which is by itself crazy. 3.74. You're talking about 6 million options trading in names where the Wall Street Bets crowd is in. They won the game. I mean, like they're pushing stuff around, and bullying stocks, and what are you going to do about it, right? What's the hedge fund's got to be scratching their heads thinking we can't do this. So that's what I see here today. We'll go through a couple of names that we're seeing some things, a few things interesting. Just want to go through. We're going to do this every day. And Tesla, there's an article, right?
Yes,
Something.
There's some news that they're recalling 6,000 cars over loose bolts.
Yes, I didn't read it. You sent it to me right before here. So, okay, so loose bolts. That's never good. It
Seems like
sound good.
Yeah. Probably somebody made one mistake, and now it's 6,000 cars later.
Yeah. Oh, this is interesting here. The recall follows one in February that involved 6,000 Model S, Model X vehicles in China, and 135,000 cars in the U.S. Okay, in 2020, it recalled nearly 50,000 cars. This is interesting in China. I didn't know about this. I mean, I'm not following this closely, but that's interesting. So, I mean, 6,500 cars is doesn't seem like it's a lot relative to the past. Stock is off a little bit. Let's take a look at our trade. We talked about being in the right spot in this trade after that big run up into the June expiration. We got the 550s we're looking at. So let's call it $8. So 8 times 2 is 16, and the 640s are $48. So 48 minus 16 is $32.
Nice.
So we're back at 32 here. Remember, max for this trade is 550. Max value is 550. If it lands at 550 in 2 weeks in the June expiration, June 18th, then this trade that we're looking at is $90. Okay, it's $90. It's got to land there. Okay, right. What's going to be interesting at the end is if it's even close. I hope it gets close, because that'll show you that it's actually very, very difficult. It's almost impossible to get the complete 90. So what you start doing is that's why you take some off even at 20, at 40, at 60. If you can catch 75, 80 out of it, it's a home run. Okay, grand slam. So, but the point is, I want you to see it. So I'm hoping that we get some fluctuation. If it gets to 550, I think you'll get a good education on how it actually works in real time, and seeing what happens. And then we can jump into another trade that we like in Tesla, both ways, and see. But we're still looking and playing that lower level, 500, 400. We're still trying to target that with our ideas and focus on how we can get there and get max value. Okay. So that's interesting. $32. We'll call that. We'll mark that today. $32. All right. Good. What do you got?
I got skills. I got some news in skills. So they're buying an ad platform called ARKI, so Arki, and they have around 465 million monthly active users. So
Jesus,
skills
the
is
stock's up $5.
Yeah. So we're gonna go through that idea that you gave.
Okay.
But they're gonna benefit from a lot of these subscribers. And as I said in the video,
how many subscribers do they have?
465 million.
This is the company they bought?
Yeah.
Gotcha. Okay.
And 83% of Skills' users are not paid. So I'm guessing they're going to be, getting ads pushed to those people to make some more money off of them.
Yeah, part of the story is the games, freemium models pay. Okay. It's competition games too. So
right. So they want to make money on both ends, right? Which makes sense. And that trade idea I was looking at it like half an hour ago is doing pretty well.
So we were looking at the Skills. We were looking at a Skills spread there, and wow, about $5. That's pretty cool. We're looking at a Skills spread, and probably should be working. We're basically targeting this earnings on that spread earnings. So I believe it was try to make about 200% if it just shot up like it is. But now what's going to happen is you will see these Julys, say it comes off a little bit. So we have a spread where it's, I believe it's the August 17s, July 22 and a halves is what I was looking at, right? So the August 17s, right, which are about 635 versus the July 22s, 635, 360. So that's 260, and it was $1. So yeah, it's doing okay. It takes it. The move happened so fast. So that is here's a perfect example of spreads. The move happened so fast that it now takes a little bit of time. It's going to take some time for that July, August to compress. Okay, so it's up money, but if you had just bought the August 17 and a halves, they were approximately $2 and change. They're now worth 630, so you would have been up 200% here. So on the spread, it's probably about, maybe it's even only because the Julys are guessed up here. It's probably up, let's call it 100%. And this is up 200. The outrights are up 200%, only because it happened so quickly.
Right.
Okay, it happens so quickly. So there's the give and take, right? In using spreads versus using just outright options. That's where in this case, it would have been better to use the outright options, but the volatility of the returns is probably is lower on the spreads. So when you use a spread, the volatility returns same contracts amount, it's just lower volatility. Now, if it stays around 20 to 20, it's up 5. So if it stays around 20 to 23 bucks, then the spread is going to start working a lot better.
Nice.
Okay, so that's how it's going. We can look at that over time as well. But I encourage people to this is what you should do, Margaret. You should I encourage people to go look at the skills trade idea, bulls versus bears video. Add to the story if you see anything. If something like this pops out, Margaret, you should actually add that link to your skills trade bulls versus bears video and show people that this is where we find information. If more information comes, we should try to add to that. We'll start adding to that. Any news or any thoughts, anything you're thinking about that you might think others find valuable, instead of saying we're idiots or whatever, just put something in there you think adds to the conversation. That would be helpful. So that's skills. CCIV is another one. I mean, stock's moving, and I think that one's an interesting trade where we were essentially selling puts and buying call spreads there. I think it was a 2040 or 2240. But that one was interesting as well. The stock is now making a decent move, and I think all of these, look, if it's granted, some of these are heavily shorted and there could be big squeezes, but they're, for it, what's amazing to me is something like AMC has come back. It has come back again. Let's see here. Let's open this one up. Sorry. So AMC, with AMC, something like this is let's do weekly. I mean, this is to have this move to 20, back down to 5, and then now trading all the way up to 60. Obviously a huge move. When you're looking at something like CCIV, this was a little bit, this was interesting because when they were buying it here in CCIV, there was potentially a mistaken thought. Everyone thought that they were going to buy Lucid Motors and actually take the whole thing. Lucid Motors is probably worth the $40-50 billion now. They were only going to get a small percentage. So once that was known and people started doing the math, the stock has come way down. If we get to, we have this call spread where we're stopped somewhere around 40, 45. But if we get to this level, again, the question of Lucid Motors and the valuation of Lucid Motors is going to come into question. So I think with some of these, you have to look at valuation here. Not saying it means anything when it's a short squeeze, but when you're talking about value, that's sort of where people will start asking a lot of questions. Even if they're probably asking questions right now, but you get past 30, 40, they're going to start pointing at how can this be valued more than these other manufacturers, these other cars. So something to look at and consider. But CCIV skills, and we just had the NEO. Again, add to the story. We'll pin some of these articles, but please just help us out here and let's get a good conversation going. So that's skills. What do we see here now? Let's look at
Roblox. What do you say?
Roblox. I can't believe skills is up $5. That's awesome. Roblox. Roblox is on fire. Another one. This is a let's go here. Wall Street Bets likes the name. We had Chase Coleman in the name down here filed. Stocks had a tremendous move. They've been buying the 100. We've seen the 95 to 115 calls all active in the last week. And today, I think it's interesting because we're seeing in Roblox, what is this? Is it June here or August? A little bit further out.
Yes, it was August.
August here. So the August 80, 70. This put spread here 7,000 times. They paid, stock's up a little bit since, but they paid, I believe, $290. So they paid $290 for the trade. Am I here? $290. All right, to make 10. So $290 basically max profit here is $10 minus the $2.90 they pay, so $7.10. So $290 into 7 is, let's call it 710, 245% approximately. So 245% gains. It's interesting. I mean, it's interesting because everybody's buying calls and somebody comes in here to buy some puts, maybe just protecting some stock. Okay, they'll buy the stock at let's take a look at what they're actually hedging, right? They're hedging from here to here.
Okay.
And clearly you have this level right here is where everybody's buying. So stock moves up like this, people, it's a, call it 2.5 to 1 play, right? 2.5 to 1 play. Yeah, I mean, I tend to think that it's probably best just to reduce the position a little bit, but it does give you leverage if you're going to buy here. To me, it's an okay play. I think even if it goes to 80, 290 is going to be $5. You're not going to make a lot of money there. So you're talking about a stock going from 100 to 80, and then that put spread is still only worth $5. I'm not sure I'm in love with the put spread, unless someone is just saying, all right, this allows me to keep holding it. I'm not sure I love it because the stock can go down 20 points and this put spread is going to trade $5. It's not, to me, it just doesn't seem like it's going to give you what you need when you need it.
Mm-hmm.
Okay, so that's my 2 cents. What do I know? They're buying it. Maybe they're also selling out the stock. But I would say Roblox is interesting because we just have not seen anything remotely. We've just seen call buying. Buying. What's another one that we're looking at here?
PENN Gaming. I was surprised by these puts.
PENN Gaming?
Yeah, we can take a look at those.
Put buying PENN Gaming, huh? All right, so let's look at PENN Gaming here. So what's interesting here that I see is just call it the way I see it, right? Okay, so this line right here, right around, let's just make it easy, 75. Okay, 75 is pretty clear that there's something going on at 75, right? Come back here, meets here. And this is a big drop. It's steady too. It wasn't, remember we saw call selling. So like there's a call seller up here, just steadily dropped all the way down to 75. There was no, retracement. You could talk 140 to 75 is down $65. 50% retracement will get it back towards, 107, somewhere around here. That would be a 50% retracement. It didn't. Instead of looking like this, which would be bullish, right? Which would be, okay, it's going to stop there. It's going to do something here like this maybe, and then you're looking for a big push back up, right? Something like that. It didn't do that, right? It actually, unfortunately, it did for the stock right now. I think it did this, which is not, it's not making everyone feel warm and fuzzy, right? It was a disaster here. It looked like it was going to crater to where? It looked like it was going to crater to probably this level next, somewhere around here. Okay. And we were looking for a bounce somewhere around here. We said this is sort of the level, same thing here. So between 80 and 75, that could be the low. It was the low for the time being, but now you're looking at it and saying, this is not great. This is not a great development. It should be that the market is not allowing you to buy and then take it up. It should, market bottoms look like this. The reason why it looks like this is because it doesn't let you buy what you want to buy, and then it shoots up, right? It's not going to let everybody win here. This looks like it's letting everybody win, right? People are buying it, they're getting long, it's down $60. Why not buy it here? And these people and the people that are caught right around here, okay, from this level, 95 to 75, this is a boat of people that if it drops and this turn trades towards 50. Now, is it going to happen right away? Is it going to, I don't know. It's going to, but something is holding it here down, and you have the 200-day to 50-day moving down. This is a weak stock is essentially the answer. Okay. It looks like a weak stock. So when we're seeing put buying, you tell me put buying in Penn Gaming, where? July?
Yeah, this week.
Whoa.
This week.
This week. Okay. So you get this put buying this week, and let's take a look. 5,000. Okay. So you get put buying this week. What the hell's going on this week? And oh, by the way, June 4th again, right? We had a call buyer that we isolated a few weeks ago only in Las Vegas Sands. So let's think about this. We had the call buyer in Las Vegas Sands. We saw, we should look at DraftKings after this. We saw a downside put buyer in DraftKings. Big, 30,000 options in the 40 strike puts in DraftKings for, I believe it was for July. We're going to look at that in a second. And now we're seeing June 4th again, for whatever reason. Someone's coming in and saying, all right, I want to buy, and this is a lot for Penn Gaming, buy 8,000 puts, 79 puts for, let's call it $1.50. Off a little bit today. It's, looks like the stock is traded up from here. So the put buying came here. IV shoots up as they buy. The stock trades down as the hedge is coming off. So that looks good. And then from there on, it trades up. But, somebody walks in to buy 8,000 puts today. I don't know. And June 4th, like why? What's the reason? Especially when the stock is already down $65. Like you have to think through this and say, why are they doing this? Why would somebody do that? It's not just hedge. People don't walk in and just say, oh, I want to hedge something for 3-4 days. And somebody in Las Vegas Sands doesn't target, 50,000 options, in June 4th. To me, someone is close to the answer, or someone understands. Now, I said this a couple of weeks ago. Maybe I said, maybe it's the answer, maybe it's not. But, combining all that, what we're seeing is Las Vegas calls, DraftKings puts, and Penn Gaming puts here again for June 4th, or in DraftKings it was for July, I believe. But we're going to look. Can Las Vegas, and if you look at earnings transcript, the earnings transcript in Las Vegas, could Las Vegas be announcing that they're buying this other, I think it's called AAA Gaming, where they're getting into the online gaming, online sports gambling space, and they have deep pockets, billions and billions of dollars that they can blow. And this AAA is interesting because they have licenses in New Jersey already. So it puts them right in the middle of things. All of a sudden, you got a behemoth competing against you. Could that be the announcement, or could that be what someone is sort of getting close to? I don't know, but it sure feels like the chips are being moved in these types of names for online sports gambling, which I guess you can include Fubo in there as well. But I look at them more as streaming. Like that would be just an additive part, but to me they're more streaming. But this is the heart of Penn Gaming, DraftKings, Las Vegas Sands. If they enter, that would be a big announcement. Who knows how the world takes it, but I think for Penn and DraftKings, I think that would be a negative, having a behemoth in there with big deep pockets. So I don't know. June 79 to pay $1.50 for that, you got to be thinking. Just look at where this is 76 with 109. They were paying it. It's probably around $74 they need. Let's call it 75. So let's call it $75 they're looking for. Why $75 by Friday? I don't know. I mean, anybody's guess, but we can look at the chart. This is not healthy. This 75 line is a big break. If it breaks 75, or if it wants to go towards 75, which is where they're targeting, it could trade 65, I think, easily. I think breaking this level takes all these people and floats them the other way. Okay, tips the
Yep.
boat over and says everybody off. All
Okay.
right.
Makes
So
sense.
okay, Penn Gaming, Las Vegas Sands, DraftKings. Now there was a
Actually, sorry to interrupt you, but Las Vegas Sands, there was also some play we can show.
oh,
real
there
quick.
was. Okay, yes, let's
Yes,
take a look.
yes.
Las Vegas Sands. Let's see here.
There's an August play. Yeah.
I'm seeing what sells. From what we've been seeing, the activity we've been seeing, they've been selling downside puts. They're telling you there's value there. They'd be buyers of stock. We got report from Macau saying May numbers were great relative to the last 4 months. China opening up would be a big deal for these stocks, a huge deal. Las Vegas Sands, Melco. It would be like what airlines did when the U.S. opened up. Las Vegas Sands, Melco, Macau. The numbers were good. We need a real opening. June, July, the summer. There needs to be a real opening, and you'll see these stocks take off. People will buy the stock at 50. They've been selling the 52.5 puts, the 50 puts, and it looks like here they're selling money. They're selling 6,000 here to buy these here on spreads. Okay, so Las Vegas Sands again getting long, and let's just look at these. I just to go back here, the DraftKings. Where is it? July. Just look open interest. Where was the open interest here in the 40s? The 40s. 36,000. So July's. That one right there is I think interesting. They came in to pay, I think it was just $1. $1 for the July, no earnings. So then it's not like they're looking for the number. They're looking for something else. You could pick up the July 45s at a little bit cheaper, but they're looking for something else here. So, something to look at, a story that's developing. We'll figure it out as it comes.
Cool.
All right.
Nice.
What else here? We got cool announcement on DBX.
Okay.
Let's take a look at that. There was an announcement today that Elliott Management was getting in. So this stock has been trading well over the last, let's call it month. The stock here, it's just been floating up and trading well. Announcement here that Elliott Management is getting the name. What we saw here, what was going on here was essentially just to show you this is the positions of DBX at holdings.com, right? So and we now know through Archegos, that was it. Archegos used equity swaps with the investment banks, Goldman Sachs, Credit Suisse, Morgan Stanley, all the big ones, 5 or 6 of them, Nomura. And they used it. Why? Because they wanted leverage. They got leverage, and they wanted to get long a lot of all the names that they got long.
Right.
That's one reason. It's just pure leverage just to get long. You use equity swaps with these banks. The other reason that you use equity swaps with the banks is to disguise how much you have, right? And so if you look here, you see Credit Suisse owns 13 million shares of DBX. UBS owns 8 million shares of TBX. Nomura owns 3.2 million shares of DBX. Okay, so that's 3 million, 8 million, and 13 million. So that's 24 million shares of DBX. Now, all of them are not one person, but it looks like someone came in. Elliott is long about 30 million shares now of DBX. Okay, long about 30 million shares. So you could see that perhaps they were buying through Credit Suisse, UBS, and Nomura. Okay, you add those up, that's 24 million, 25 million shares. That was as of 3/1. They probably bought more over the course of the last couple of months, and they're making their announcement. This is what people look at. They do this. Why would Elliott do that? Because once Elliott takes a position, a full position, and it's greater than 10%, it's greater than 5% or 10%, they actually have to file with the SEC. They have to tell the world we're long this much of DBX. Okay. By going to these banks, they don't own it. Credit Suisse owns it. Credit Suisse owns 13% or 13 million. UBS owns 8 million and Nomura owns 3 million. So the banks own it. Elliott doesn't own it. So Elliott doesn't have to file. So what they do is they divide the buys between all the different banks so that they don't have to file until they're ready. Because what happens if in March, Elliott has to file and say, we're long 5% or 10%, the stock's going to jump and Elliott's not going to be able to get the amount of stocks that they want. So just because everybody say Elliott's in it and we understand they're smart and they're going to do something with it and be an activist. So this is the game that the hedge funds play to, and it's legal, but they hide using the investment banks until they're ready to file. And then when they file, that's when everybody knows. So right now we're seeing that that it looks like the Wall Street Journal is basically saying they own a big stake, as much as 10% of DBX, which is a positive thing. We like the stock. It's fairly cheap stock, cheap tech stock. They're only what 10. Look at what DBX is. DBX is, I believe, only 10. Maybe it's a little bit bigger here now. I was gonna say 10 million. It's $11 billion. So $11 billion company. And if you look at top 15 players in the cloud space, they're up there. And you look at the names, it's like Google, Amazon, obviously Microsoft, all the big names, but they pop up near the bottom at like number 15. And so I would think that they also have technology. They deal with the workspace, and Slack got taken out at $50 billion by CRM. These guys are nowhere near that as far as the number of people that were on Slack, but they have the technology and the people that built the technology, the engineers. It's all know-how, right? If you want to go do that yourself, you got to actually hire people and know how to do that stuff. And they're one of the leaders at it. And at $11 billion, a drop in a bucket. Not only do you get all the business, they have an enterprise business too, corporations. So not only do you get that business, but you get you get the know-how and this workspace that they've been building. I think it's, I've been saying it's a no-brainer since 22, and it's been moving up, but this could be a big move higher for the name. So something to look at. I think it's interesting. I still think it's interesting. They have a lot of free cash flow. They took down they took last year to slim down. Okay, it made them stronger as a company because they cut out a lot of costs, right? And they're still operating at the same, if not better now than when they were before. So cutting out a lot of costs, increase in revenue, that's always a good recipe. And look, when you get Elliott managed behind them, they have tremendous success over the last 30 years in taking software that's their taking AT&T, which they tried to do. That's a juggernaut. Like, that's huge. Taking a $10-11 billion company and turning it around the way they want to turn it around, or move the chess pieces within the company the way they want to do that. They're experts at that. Software is their game. AT&T was just a little bit too big. Even eBay was a little bit too big for them.
Right.
So, but software here, this is right up their alley. Obviously connections all over the place with who they want to place and whatnot. But I think they like the CEO, and he's the first, he's the top holder, Drew Houston, and now Elliott behind him. So a good story. Let's see what they do. I mean, the stock was trading well into this. Let's see here, DBX, just to give you an idea of what we're looking at. Here's a good, so you can just see something that, to give you some context of what's happening and where we're going. Let's just years. Okay, see that the stock high was 43. This is right at IPO when it came out. But what you are seeing, and I don't know if I have a, probably do, but let's see here. Oh, let's see what this does. Oh, we want that. Oh, okay, interesting. See, learning while we're doing. So we're looking at something like this, and you can sort of see what's going on here, right? Give you an idea. It's following this pattern, 2-3 year pattern. Looks like it's trying to climb, and that's what we're looking for. That's what I was looking at before. You got the 50-day climbing, and then fundamentally, it's fairly cheap stock in tech. 21 times forward earnings, 22 times, and what do you call it? A 50-day moving average moving higher. I think it's good. Technically, it looks good. The story is good. They slimmed down during the last year, and now you got Elliott Management saying, yeah, we like the stock. We'll probably be buying. They're probably buying it somewhere around here, 22 to 25 most, and then the last bit somewhere around here in 24. So they've been buying it through here, average 25. It can go to 35, 40, I believe.
Cool.
Okay.
Nice.
Good
Analysis. Thank you.
What else?
What
else? How time do we got left here?
Here's one you like a lot. eBay. There was some news today. Yes, they're starting authentication for luxury handbags, and the Real fell off because of that. Their competitor, I guess.
I saw that, and I wanted to show you. Look at my screen here. So I want to show sort of what's happening here. Like eBay, and I'm going to give you a trade idea after this because I think it's silly. I think there's a lot of potential here. I'll say this first. We got long October options, 70 calls in eBay. I've liked the eBay for some time now. eBay on our entry didn't get us what we needed. It was basically, it went straight down from the opening print. It was buy. The people I coach know that, hey, we're supposed to be, on that second buy, it's fine, but don't buy the third. That could saved a lot of people if you just listen to that. Buy the first, you're getting beat up. Buy the second, getting beat up. Don't buy the third. Stay in it. I think the market made a mistake here, frankly. I think, it got caught up with everything else, technology, eyeballs, and this is a cheap stock, first and foremost, okay? Nobody's looking at eBay. Nobody cares about eBay. eBay is been dead money for a long time, okay? But what they're doing here is something very different, okay? And this is, Pages, eBay, authenticity guarantee. Mark, you should put that, or we'll put this under the clip if we do this. This is a page I want you to look at. I want you to understand what they're doing here. Check out sneakers authentication, watches, handbags. Okay, they made an announcement today on the handbags that basically they would authenticate any handbag over like $500. What they're doing here, again, in just this one page, is trying to show you what I've been talking about: sneakers, luxury watches, luxury bags. They're also talking about authenticity guarantee, good word, shop with total confidence, secure delivery, no cost to you, physical trust. Okay, eBay over the years has lost a lot of trust with the buyers. They have 185 million customers. Okay, now are they all buying stuff? I don't know, but they have 180 million people that have bought. Recently, they are very big in the markets that matter with the millennials, such as sneakers, even collectibles like cards, baseball cards. Okay, huge market out there in baseball cards. eBay is one of the tops in where people buying and trading and selling these baseball cards. I used to love baseball cards as a kid. I still have them somewhere in a box. I got to go take a look. The problem is I don't know exactly what condition they are in, because I'm not sure I ever thought that they'd be worth what they're worth. I have like 2 John Elway rookie cards, and I'm looking at the price going, I can't believe they're worth, X dollars in mint condition. A Michael Jordan rookie card that, when I first started on Wall Street, I said to myself, I want to buy one of those. And I think at the time it was like $3,000. Mint condition. The problem is they always had to stay mint. Right now, the only thing that matters in that collectible game is 10s. You need a 10 out of 10. Michael Jordan rookie cards, upwards to $1 million, 750 to $1 million. Tom Brady rookie cards. Tom Brady rookie cards are at, there's only like 22 rated 10s, 22 cards that are rated 10. They asked 21 people if they would sell them for $5 million. The people who own them said no. Okay, there's one for sale right now. It's being auctioned. It's like $2.5 million. It's up for. So there's a big market in this. Now, people got to believe what they're buying. They got to believe that the card is real and whatnot. So it's got to be authenticated. But what eBay, getting back to eBay, what they're doing is they're attracting a lot of different folks, a lot of different customers these days. And they have the AI now. They're using AI technology. It's very important to understand that. And if you read the transcript and start looking at what's going on, is the buyer that's walking in today for the first time, okay, he doesn't have the whole history of what it was. He's actually seeing eBay and saying, this is actually pretty cool. I know it's real. I'm buying it. And then what they're seeing is the person coming in today is actually transacting across other different things. Okay. As you can imagine, Wall Street background probably loves sneakers. They probably, now able to sport the Rolex watches. They're able to mess around, and this is a perfect area for them. I look at eBay as, the way Macy's and what's it, JWN and Nordstrom, these companies, they changed about 15 years ago, 10, 12 years ago. They basically, you used to walk into those stores. The place was mobbed with clothes. It was like, oh, I want a shirt. It's like you're looking through racks. Then they made the store within a store concept. And now you walk in and it's not as cluttered. You know that, you want women's wear, you go upstairs to the 3rd floor. You want women's shoes at Saks, you go to the 5th floor. They have it, everything is warded off, and it makes sense for the buyer. Online, you can look at, this is a new look for eBay. It's not they used to throw literally a billion items and you'd have to search, and as good as the search bar was, that's what you got. But they're doing this, which to me looks really interesting, just on the look. The other thing that is important to understand with eBay is that this is luxury goods and whatnot. They're going to do these verticals. Like you see sneakers, watches, handbags. They're going to do that for everything. Home decor. They're going to do it for, dresses. But even better, they're going to do it for, one of the things he talks about is this big market, trillions of dollars. I think it's $1 trillion. I mean, maybe more. But basically, it's for the average user who can go into their closet and sell on eBay.
Right.
So my thought when I first, when I'm thinking about this, is saying, okay, I'm the average person, and I'm looking at this and I'm saying, how would I go on eBay to sell some of the stuff I have that who's going to buy it? And one, I don't want it to be a job where I got to. And I just thought to myself, why doesn't eBay? I'm sure they're thinking about this. If I thought about this, they're probably thinking about this, or maybe not. They can hire me, but why wouldn't they just create a store front, right? I don't want to create a storefront. I want it to look good. Selling is all about making it look good. So create me a storefront, and then I can take picture of a shirt or that I want to sell, or some sneakers I want to sell, or whatever I want to sell, right? And use this. They have augmented reality now, virtual reality. They can make the pictures nice. So all I literally have to do is take a picture of whatever I want to sell. It comes out with a white screen on the back. They take everything else out except the product. They do a 3D thing. So they actually take 4 pictures. They can turn it around and it can be sold as if it's your store. And it doesn't take any time for me as the seller to actually jump on and figure out how I want to sell, what I want to do. So they should. I mean, I said this about Bloomberg too many years ago. It's people in general, people are lazy. So they, how do I actually get to somebody? Oh, just leave it out. Just, I don't want to say put it in a mailbox or whatever. I don't know how it actually works where you deliver, but make it easy like Amazon does. They pick it up and then you want to return? You tell he's a return. You put it outside your front door. Amazon takes it away from you. They should make it easy. And if they did, I think that would be huge. So what I'm getting at is it's another cheap stock. Okay. Another cheap stock for what they have. They haven't done anything for a while, but it's taken the last year and a half to start turning things around. So let's look at the answer. The answer is, okay, here's eBay. Going to look at the same thing in eBay. Stock's had a big move from here. It's a retail store. It's done nothing compared to the other retail stores, but we're looking at, let's look at 15 years to really get an idea of what's happening here. Okay, just climbing, and it's been stuck between 30 and 45, call it 25 and 45 since 2016. Okay, and this is essentially one of the largest retailers in the world, right? Buying and selling. And they're making the experience for buyers and sellers better. I think this stock could double in a year. Okay, I think it could double. And I think it just takes time. If they get it right, I believe it's a double. If they don't, then it's going to languish around and maybe it trades up a little bit or, whatever. But I don't think it stays here. I think it doubles. And I can look at the way the options are priced. The reason we took October was because, one, I thought that the stock was actually moving higher. I did still want to see 2 earnings. So we got one. It wasn't good. The second one we're going to get, and I think the market got it wrong here. I think it got caught up with every other technology stock, but this is a good stock, good management. And I can buy I'm looking at this. I can buy the 80 calls in 2023. So 17 months from now. Okay. I don't have to think about it. And I could say, if they get it right, this thing trades 120. I can buy the 80 calls today for $3.80 for 17 months on a technology stock that, you know what happens when when everybody starts liking eBay and it becomes this sort of, wow, they really got their act together and everything's working and eBay, and eBay's back. Then you think volatility is going to stay at 29. No, that's going to be 40, 50. People are going to be buying options all over the place. So that's going to help you out. So I look at this and I just say $3.80. Give me some of those. And you know what? I don't need to look at it. I don't need to play the up and down $1, $2. I think even if it trades over the next 2 months down to 55, 50, it's a cheap stock, trades again down to 55, $50. It doesn't matter. At the end of the day, the answer is, if they get it right, it's worth a hell of a lot more money than $63. Right. Okay. So that's how I would look at this one here, because it's this longer term story. For us, longer term, I try to use October, but it is a longer term story. And if they get it right, they're going to really get it right. And they're going to hit it big here. I like what they're doing. I like how it looks. I like how the site's starting to look. It just takes a matter of time. And they're getting this baseball card collectors. There's millions and millions of let's call it males 18 to 45, which is where everybody wants to hit. Millions of them that are starting to trade these baseball cards because they're making money and because it's fun and because they like it as a hobby. And now it's a business and people are transacting. So eBay is something that I'm I don't know the next 2 weeks, but I look at that trade and I think there's something to me that's mispriced. Okay, it's mispriced because for the way I'm thinking and what I'm seeing and the trend we're looking at. So that's an idea. That's something to look at in a way that it's not about day trading this thing. It's about placing something. You can have three thirds, right? You could do 1/3. Then you come back maybe a month from now, it's still not working. Okay, it comes out, the market retraces. You could do another third. It's like the Oxy, right? Same thing. It's sort of, if Goldman Sachs' target is correct, 100, if there is inflation, it keeps going, and Oxy is good. Oxy is not staying at $26. I guarantee you that. Okay, it's not staying at $26. It's going to be high 40s, $50 if oil gets to 100. When oil gets to 100, what do you think people are going to be saying about the oil stocks? You think they're going to be questioning how much money they make? They're going to be so excited about the oil stocks. The stocks are going to be like shooting up to the moon because oil's 100. Right. And at that point, they'll be saying oil can go to 200. So you have to try to find these situations where there's a disconnect, where if this happens, how can the world be like this, right? We look at Facebook. If Facebook is going to trade 400, how can the world be here? So someone is playing this sort of, if the world is good, then we will be, we can get the stock up here. So I think it's something that, the lesson for today is, if you were playing this short squeeze in AMC and you bought, 3-4 month call options, just looking and saying, I'm just going to leave it, it's a home run. And, I think a lot of times, everybody gets too caught up with the day to day and, trying to make that the real quick money. Whereas if you just try to do what we're doing and just slow it down, try to think through it, think about what could happen, what the story is going to be when the stock is here. That's what we're trying to do. We know what the story is now, right? What's going to be the story in 3 months when this happens? And if that's the story, imagine how the options going to be trading and the stock's trading. That's how we got to train our minds to think. That's what I'm trying to teach you. And forget about chasing. Try to figure out what the story is. And ultimately, here in this environment, buying longer term options is going to be easier because it's a mirage. What's happening? The market is not necessarily moving. We use 116.5 for the last month and a half. It feels like 7-8 weeks now where we've been talking about 116.5. I have no idea why more, but it's up and down 1% between that. What are we up? A 1% from 116.5. 416.5. 1% from 416.5 is up and down. That's where we've been. So it's look, that's how I would look at it and approach it. And I want you to, in this time period until the market's going to make that move, it is a little bit tough in how you want to approach options, and you want to be a little bit more, find what you like and find how how it's going to get there. For me, I know that it's in general trying to be a little bit more longer term. Okay, trying to find cheaper stocks with volatilities that are acceptable, and trading 100 vol names right now is tough. And you can see, the Palantirs, even that they're starting to climb again. But when you get to 100 vol, it becomes very hard. It becomes very hard. All right.
Yeah,
I think I gotta go.
Awesome. Thank you, Felix. That was a great lesson.
Man.
Be a good one.
All right. Be good.
Thanks, Felix. Thanks, everybody. Like the video if you haven't. Subscribe if you haven't. And we'll see you tomorrow.